that AI is still a theoretical type of new technology, new idea, new whatever it may be. It's not really anything to hype about yet. They're just everybody is using it, in their um, earnings reports. It was the same thing with the metaverse. Everybody was talking about Meta in their earnings report in 2022, and it shot everybody's stock up when they mentioned it in their earnings report. Well, now everybody's doing it in AI just to drop it in. They're just throwing it in there. They don't really have anything that's there, and the ARM stock has rallied hugely on the same type of thing. It's based around Nvidia and all that type of thing. So it's not something, and my next article kind of plays off of this, but it's nothing.
Hello and welcome back to The Half Truth. I'm Justin Singletary, Patrick Moorhead with me, and we're here to record, I guess, our second recording of this year, maybe our first. First one kind of got a little botched with our recording, but we're back again to talk to you about some different articles we came across where, like we've said before, there's more than meets the eye with these articles. They seem to kind of give you one perspective on the matter, and we're here to kind of give you a little bit of a deeper dive and maybe give you some more clarity when it comes to some of these articles you find on various news sites with regards to finance.
But not investment advice.
But not right. Let's be clear. So let's go ahead and jump right into this, and I'll let you get started.
All right. Well, I wanted to kind of continue on. Most of my articles are kind of a continuation of last week, since we didn't really get everything in. And last week you talked about the ARM stock. And so the article that I have is ARM stock rally shows investors hype extends to theoretical AI plays. Morning's brief. So it talks even about the theoretical AI. So in the title, it's kind of contradicting itself, or giving a little bit of the truth behind it, what we talked about last week, that AI is still a theoretical type of new technology, new idea, new whatever it may be. It's not really anything to hype about yet. They're just everybody is using it, in their earnings reports. It was the same thing with the metaverse. Everybody was talking about Meta in their earnings report in 2022, and it shot everybody's stock up when they mentioned it in their earnings report. Well, now everybody's doing it in AI just to drop it in. They're just throwing it in there. They don't really have anything that's there, and the ARM stock has rallied hugely on the same type of thing. It's based around Nvidia and all that type of thing. So it's not something, and my next article kind of plays off of this, but it's nothing. It's just hype that's going on and rallying the market.
Yeah, I would agree. I mean, you just like from our previous thing from last week, how much involvement there is between NVIDIA, ARM, one of the articles I'm going to talk about, which is the company, what is it, super microcomputer, so there's a lot of correlate, not a correlation. I think I said that last week is maybe not a good word, but they're all in bed together, and they're all. How is it that the same, 10 AI or 5 AI stocks are just, day after day after day, just constantly increase, going up in their, price of their stock by leaps and bounds. I mean, it's just setting up for a very bad day for a lot of people. And I've talked to you, going along with what you were saying, I've talked to 3 or 4 friends who, brought up NVIDIA, brought up ARM, brought up super microcomputer and Taiwan Semiconductor rather. And they're like, "Oh man, my positions are great. I've made so much money so far." And I asked each one of them, I said, "Hey, so, now that you've got these, great inflated values, are you looking to maybe trim some of your position? You don't have to sell all of it. Are you looking to trim?" All of them, without question and hesitation, said no.
Yeah.
And I'm like, okay, so, and two of these guys were in the same situation when Tesla was rising up to $1,000 before it split down to whatever it was, 300 or 400, and then subsequently, sometime thereafter, sold off. And I asked all of them at that time, did you guys trim any of your position? No, we should have listened to you. So,
That
uh,
goes
what,
to
what
the point of PE that we were talking about. This type of stock is not a buy and hold type of thing because of the elevated PE. I mean, it's at 1500, 1539 was the PE the last, I checked. So that is not a long-term hold at that PE level. That is a trading stock. So if you're going to trade, by all means, go for it. If you're going to buy and hold,
right.
away. Well, and then this plays into my other article because NVIDIA just filed a 13F, which
Yeah,
shows what they own. And they have a huge stake in ARM,
yeah,
SoundHound, um, so a couple other ones that were kind of like big. So NVIDIA discloses that they NanoX, these are all AI investments. So it's one a way for them to juice their returns, and it's why I feel that their next earnings report is probably going to show stellar again, and their stock's going to climb even higher. Um, because all these stocks, ARM, Nano, what was the other one, SoundHound, they all skyrocketed just before this 13F report. So insider trading much, it's like, come on, like these all went up huge before this happened. So they're all going to benefit from that rally. It's also a way for Nvidia to drive profits because they can force, because there's such large stake ownership in these, they can force them to buy their chip. Whether it's advancements or not, it's just the next greatest kind of continual motion of having profits. So it's really telling of when they released that 13F for the first time in history of what they actually are invested in.
yeah. And really quick to add to that, there was a thing that I found where it shows market cap to revenue trailing 12 month with Amazon and Nvidia. And so you have trailing 12-month revenues for Nvidia is 45 billion, and then you have trailing 12-month for Amazon is 575 billion. But yet Nvidia is now worth more market cap wise than not only Amazon, but I also read yesterday that it's bigger than all of the energy companies combined, if I'm not mistaken.
Something
I
like
think I
that, yeah.
briefly saw that, or at least like the top three biggest ones. I don't remember exactly which, if
It's
it's
bigger
in,
than the
the top
Chinese,
10 or top.
bigger than
Yeah,
the
that too, that it's
Chinese
bigger than
software.
the, right. It, it's not sustainable.
Well,
Not
it's a
sustainable.
trading stock, not a buy and hold stock.
Exactly. So yeah, that'll kind of lead right into mine. Mine was super microcomputer surge. Super microcomputer. That stock surged today. Is it too late to buy the red hot artificial intelligence growth stock? Well, as we've just said last week, as well as here, you're reaching into uncharted territory. And yes, every day it could continue to click higher and higher and higher. It's up 12% today. It's up a total of 210% just from January 1 to right now. That's insane.
That's it's the meme stocks all over again.
All over
The
again.
AI, it's because their revenue has not increased that much. So it's just so happened that you've been in it. And a lot of, we talked about that most of the stocks, like 90% of the stocks over the last 2 years have done nothing. It's only the seven that have really carried everything up. But the problem is, you look at all the mutual funds, all the ETFs, they're, any type of those, they're very heavily weighted in those seven stocks as well. So people haven't really noticed that the market has gone nowhere and the market is going nowhere, because they're mutual funds that the advisors have them in, where they have 20 different mutual funds, and all those 20 mutual funds are all heavily weighted. So you're all invested in the same thing. have rallied a little bit too. Not as much as those seven stocks because they have other investments in there, but it's been very muted. And again, semiconductors, I saw that too, and it's actually outperformed Nvidia.
Yeah.
Kind of the silent killer of Nvidia. Some article I saw called it.
Well, yeah, you're the ARM and super microcomputer have completely outperformed NVIDIA just in the first 45 days of this year.
Yeah.
Not to say that NVIDIA is, still on a tear as well.
Well,
Um,
and didn't you say is it last week? Is it Nvidia that uses the semiconductor chips, or semiconductor uses Nvidia chips? It was one of those. So like they're in cahoots with each other, anyways.
And I read yesterday, and I'm sure you saw, Patrick, that, the Oracle himself, that was what they put on there. The Oracle himself, Warren Buffett, is finally starting to trim his position in Apple, of all places, which makes sense because, hey, even for the guy that has done it best outside of Nancy Pelosi and some other senators and Congress people, has, obviously done very well over his career. And when you see somebody like him starting to take chips off the table, you have to question yourself. You have to question what's going on. What is he seeing? You got to remember this guy controls huge sums of money that can move actually a market in a little bit of one direction or the other. Um,
That's
so
actually
again,
that was actually
so
my
go ahead.
next article was to talk about that Berkshire sold Apple stock. He sold 10 million shares of Apple stock. He still owns over 900 million, but he sold 10 million and bought Chevron.
Right.
There was a
He's
chart that
moving to
I saw.
energy.
Yeah, institutional investors over the last few months have just skyrocketed for them selling. Like more institutional investors have sold than anybody else, which they say institutional investors are the smart money, and it's always the smart money that gets out first, and the dumb money piles in, which is kind of what we're seeing right now. If you really think that institutional investors are always the smart money, but it also goes to our thesis of what we've been saying for the last year now that we're bullish on oil. So it's now, Warren
Yes.
Buffett, we were early, and now Buffett's coming in to kind of back us in to that because Chevron took off when that news came out too. I think it's up like 3-4% from when he did that. So,
Yes.
yeah, I thought that was super interesting that he's doing that. It's kind of a hedge. It's a protection, a cautionary tale, like you were saying, that maybe it's time to start thinking about this type of stuff.
And then to add to that too, I just read because I had mentioned this last week. Jeff Bezos sells more shares. I think it was another 2 billion, so a total of 4 billion in a matter of 2 weeks. Or well, the first sell was last year, and then I think this sell was another one. But still, in a very short period of time frame, you're talking about the gorilla, the big gorillas out there, the guys that have all of the money, are becoming a little leery of what's going on. So,
Even
uh,
Facebook, Meta, what
yes,
Zuckerberg sold a crap ton, too of his own
yes.
shares because they wake up and they see that okay, this is not sustainable, this is astronomical, and now he's going to build a bunker because he knows we're all going to die.
Well, his bunker is going to be a lot nicer than ours. It'll be in Hawaii.
Yeah,
Ours is going to be in the underneath the staircase at our house.
yeah, my crawl space under my house.
Right. So one of the things, just to go back really quick, that I liked in this article was towards the end, and I'll read you the sentence so you guys can see what I'm. So at the end of this article, and for those of you that watch this and want to actually read the article, at the very end, there's a sentence that says, "Shares have become riskier and could even be volatile, but the stars could be aligning for the company to continue crushing expectations." You're basically talking about, hopes and dreams, not actual data, and
Right.
not
Yeah. What
actual.
are they crushing? They're not doing anything.
Right. So you mean to tell me that in 18 months that chips have suddenly rapidly changed so much that you can have a really solid argument for why the stars are going to continue to align when, as we just pointed out, the big guys, the Oracle, Facebook, or Mark Zuckerberg, Jeff Bezos, you name it, are selling huge swaths of their company stock. Why? Well, in past, it's told us that they see something coming that not everybody else does. And what's really disappointing is these articles, it drives me crazy because, as social media has really come into the picture over the last 10, 12, 15 years, it's just nothing but clickbait. And I know we've mentioned this before on previous shows of just how this clickbait can really drive somebody to go and, oh, hey, maybe there is still room to buy, super microcomputer. Maybe there still is room to buy NVIDIA. Yeah, you could be right. And to Patrick's point, or kind of what we talked about, if you're day trading it or you're trading it on a short-term basis, but for the long haul, you're going to get taken out to the woodshed big time. So anyways,
What
that was
happened with
kind of
SPACs?
the kind of
You know,
the
SPACs
icing on top of the cake. Sorry.
SPACs got annihilated. SPAC was the craze, what, 3 years
Right.
ago, and before COVID, 4 years ago, and they all got taken out. And SPACs was nothing new. They made it seem like SPAC was this new greatest thing. SPACs had been around for, you know, 50 years, 30 years, something like that, and it was nothing new. It was just a new term they put on it, and they got all annihilated.
Well, and it was also too when you started to hear about, when the whole Bitcoin craze was going, of, hey, what, 3, 4 years ago, 2, 3 years ago, whatever it was, everybody was like, oh, well, we need a, NFT, or we need to have some sort of involvement in the crypto space and, decentralized finance, or blockchain technology. It was the blockchain technology is what everybody was coming out with. It was like, oh, we have our new blockchain technology that's going to be able to do X, Y, and Z. And it just started to drive the prices, or the stock prices of some of these stocks, somewhat through the roof. And what happened right after that?
Yeah,
They came back to reality in a very quick period of time.
yeah,
So that was kind of my article on this one.
yeah. Did you have another one?
Yes. Do you want me to go ahead and get? Okay, so this goes back to part of what I think, what I talked about last week when it came to electric vehicles. So this one was about a company called ChargePoint. So it says ChargePoint is jumping today, but still down 95% from its high. Is it a time to buy the stock? Well, if you watch or listen to what I had mentioned last week, and I know I had talked a little bit about it in some of our previous videos, yes, it's down 95%, but that doesn't mean now is the time to start buying. And, if you go and you actually look at the problems that the charging stations and just electric vehicles are having in general. And again, I'm excluding Tesla out of this because Tesla's slightly different than the others. You had Ford, you had GM come out and basically cut their entire, R&D when it comes to electric vehicles. The production of electric vehicles, they cut them almost in half, if not more. Why? Because people aren't buying them. People, when you go to charge them up at a charge point charging station, half of them don't even work.
Well, and
So,
did the article even talk about that and talk about why the stock is down 95%? Like, obviously, the stock is down for a reason, and it's probably, if you look at their earnings, what's going on, the underlying thing, it's not just because the stock is down 95% means, okay, it's time to buy now. No, they probably have some underlying problems that they need to work through before it's a good time to even think about buying.
right. And on top of all of that, the infrastructure is just not there yet. I mean,
And
with the
never will be.
current infrastructure, 50% of the charging stations work. So that means the other 50 don't work out of the thousands that are across the country. So still the infrastructure isn't there. And that's
Well, and
just a
you,
shame. I mean, because you bought this car with a hope and dream that it's the next best thing and you're going to save the planet and all these other things. Well, now you can't even go charge it. And if you live in California, they tell you to buy all of these things, but then when summer rolls around and we have heat waves, they tell you you can't use your electricity. So what is it? What do you choose? You
Well,
choose gas that's at $5 a gallon, or you choose an electric vehicle that you can't charge. So which one do you go with?
and you say you're taking Tesla out of this, but Tesla doesn't have the infrastructure either. Like, yeah, sure, their charging stations work, but there's always a line at the Tesla charging station. So if you don't
Absolutely.
have a home charging kit or you don't charge your car at home, good luck even with Tesla. Like you're just setting yourself up for a headache for dealing with that because the infrastructure's not there either.
I would encourage everybody to read any of these articles that we mentioned to you guys, because it's, you'll start to realize the trends of what we're trying to talk about.
All right. Well, thank you for everybody for tuning in. I think that covers it for this week, and we'll see you again next week.